account, and we've had $2,800 on the other, so $7,000 based on the trades that we've talked about and we've shown you in terms of screenshots and tweets and all the various other things. So you can see it's not like, you know, we do 500 trades and we only show you the profitable ones. If that was the case, this would be a huge negative account, wouldn't it? But it's not. It's a huge positive account. It always is going to be a positive account. So you get the basic idea that the trades that we show, they're all tallied, and you can see what the overall P&L is for the day, if you know, on the tallied trades that we've been showing you. So it just gives you an idea of the fact that when you see these trades on net basis, you can start to really recognize that there is actual profitability from these types of trade narratives. Understand? Comprende? Comprende. So the bond price has got absolutely murdered. So well done anybody that got the lucky break. My goodness, I think that was probably the luckiest trade we've had in a long time, to be fair, guys. I wish I could claim success on this one, but I can't, and that's probably the reason why it kept going, because nobody could claim success on that one, so it just kept people selling into it. But that's brutal, isn't it? That is absolutely brutal. What a bad news story for the Fed. Why is that a bad news story for the Fed? Think about that yield that they're going to have to pay. Think about the size of the coupon they're going to have to pay on that quarterly refinancing, right? Going to be a lot bigger than they'd expected. So there's the picture of the chart on the bigger narrative. This is quite a sizable push, quite a sizable story, guys. When we look at it on a 15-minute chart and we start going through the same process of trying to see whether the value was bearish or bullish or whatever, you can see it's actually completely flipped the curve. You can see it's completely flipped the curve round at that stage, very, very, very aggressively. You can see it's been kind of negative for the last short while here, to be fair, and it's gone very, very negative again here, very, very negative during this period. So it gives you a few ideas, it gives you a few thoughts about the shape of this going forward, the shape of the markets, and trying to think about the ideas behind these stories. Let's see if it's got anything to do with inflation. What do you think? Well, we obviously can zoom out and we can see that it has a lot to do with inflation. Do you see that? When you look out on the charts like this, you start saying to yourself, okay, because we actually touched on this yesterday, to be fair. You guys might recall we actually discussed this yesterday. And we discussed this idea that the big commercials are selling when the coupon is going to be a lot higher. And the coupon's going to be a lot higher. It has to be higher because of the big inflation pop on the 5 years. So when we saw the break to the downside here, you know it's going to happen again on these pullbacks in these areas here. You know it's going to happen in those pullbacks. You know it's going to happen on those pullbacks here. Well, yesterday you knew it was going to happen on these pullbacks because of yesterday's inflation break-evens. Understand? So yesterday's inflation break-evens were away up here. So of course the bond has to go down. Now let's try and get context to this inflation break-evens now on a daily chart. And I don't want to frighten you too much, guys. I don't want to give you a bit of a frightener and turn this into some sort of a political debate. But you know, let's take a look at the 5-year inflation break-evens on the 2019 going forward. So this is the 5-year inflation break-evens. As I said, I don't want to frighten you too much. But how much more does interest rates have to go up? Probably realistically to about 20%. Realistically to about 20%. If they've got any chance of controlling this inflation at the present moment. Now that obviously means that that's not likely to happen. We already know it's only going to go up to about 2%, 3%, 4%, 5%, maybe top line. So we know that that's unlikely. So what else has to happen? Well, they have to get that 5-year break-even then sorted, haven't they? Bearing in mind that 5-year break-evens does not include oil, okay? This is not oil inverted. This is commodities inverted. Okay? So that's the commodity prices inverted right there. So obviously we've got the coronavirus spike as well here, so we want to get rid of that noise. And we'll take it down a little time frame or two to the 4-hour charts for a while so that we can just get rid of the noise. So is the 5-year inflation break-evens trading towards inflation itself? Of course it is. So obviously when 5-year inflation is trading towards inflation, inflation is the purple line. I'll change it from purple to red so that it stands out a little bit better for you guys. Okay, so there's the inflation. There's the actual compound inflation from, remember, I've got oil prices, I've got copper prices, I've got soybean prices, and I've got wheat prices included in this line. So it's not just oil. It's just a combination of all of them with no special formulas, guys, just straightforward combination. Okay. So now we've seen that combination, we can see that 5-year inflation break-evens do trade towards inflation. The good news is, from the bond point of view, is fortunately, on a big account of oil, of course, coming off those higher prices, we've at least seen inflation break-evens, at least we've seen inflation falling from the mid-March highs, okay? So we've seen inflation falling, but not by much, to be fair. And obviously, as we zoom out of the charts over that period, we can recognize, of course, that since the spike in inflation, you can see that the inflation break-evens was way overpriced up here and had to collapse, which meant in the short term, there had to be an enormous sell-off of bonds in this area, right? Had to be an enormous sell-off of bonds during the beginning of March for the concession. Remember we talked about this at the concession, yes or no? I think it was Sam that asked the question that at the concession, are we going to get a huge concession this month? And the answer was absolutely massive concession required just to have a bond that makes any sense to people buying it. Now, obviously, we never got quite enough concession because the inflation had carried on right through during that period. So the concession requirements just kept the bond dropping. Now the inflation's turning, the inflation break-evens will start turning. Well, we know that there's probably going to now be a bid on bonds here, yeah? Everybody sees that, yeah? So you should be currently buying treasuries. Should be currently buying treasuries. Understand? Makes a lot of sense. Everybody's on board. Bada bum, bada bing. And obviously you can see that on that 4-hour chart far easier, far cleaner than you can see it necessarily on the 5-minute chart. So there's the level right there. Look at it. You see that opportunity to buy treasuries off of that 71.10 level? Crazy, isn't it? Crazy. So you can see what's happening, guys. We've finally got a chance to really buy some decent price bonds. And we've managed to get a little bit of a buy side pop off the 10s up to a price of 26s for half a point. Nice. Yeah, we'll take it, right? We'll take it. Absolutely, we'll take it.